what I want to do first is I'm going to go through a disclaimer real quick. I am not an attorney or an accountant. I'm giving advice based on my experience and successes. I do not claim that anything in this presentation is legal advice, estate advice, or tax advice. Please feel free to check with your accountant or attorney before using any of the techniques discussed in this presentation or any techniques I ever discuss with you. Stock options and real estate investing have inherent risks, and these should not be taken lightly. Any claims made in this presentation are my results or the stated results of students. Your results may differ. Results are also based on effort. I promise you, hey, I'm so glad you came. I promise that if you do nothing, your results will be nothing. If you actively learn and participate in any programs, your chances of success will increase dramatically, but are not guaranteed. Like with any program designed to help you financial success, you need to be prudent and responsible for your actions. All right. The other one just basically says that stock options are risky and they move, and big swings will make you big money or lose you big money. I didn't want to read it, but all right. So let's talk a little bit about what we talked about a couple of weeks ago. The first thing I want to talk about is how money managers control the stock market. Everything you think you know about the stock market is wrong. Stocks don't go up and down for any logical reason whatsoever. They only go up and down because the money managers make them go up and down. Once you understand this and realize this, you fully get the stock market. The stock market is fully manipulated. Who knew that already? Who thought that? Right? But it's not an evil thing. It's just a thing. And once you realize it's just a thing, you have to learn how to use that to your advantage. All right. So, if you remember, the stock market goes up because of fear and greed, or resistance and support, but fear and greed. So the fear starts out where the stock market is, and actually later on when I come back, I'm going to show you the what's going on with the Dow right now and why the Dow is about to drop. And it's clearly about to drop, but I'll explain that later. Because basically, these people, the money managers, they want to make their money this week. And over here, they realize if they buy the stock here, they're going to make money again. It's just a continuous cycle. Basically, fear and greed turns into my tuna fish and steak theory. Now, I'm the only one teaching this theory because I'm the smartest person on the planet. Oh my gosh, I got a lot of faces going, what am I doing here? Come on, it's funny. Tuna fish and steak. That's funny too. We'll get to it in a minute. All right. So tuna fish and steak is all about this. At the end of the week, on a Friday, the money managers sitting in Wall Street, they want to take their wife or their girlfriend or their mistress out for a steak dinner at Capitol Grill. So they go to Capitol Grill and they grab their steak dinner. Anybody ever been to Capitol Grill? Okay, I can't get out of Capitol Grill without spending, for two people, without spending $350. All right, so you understand where I'm going with that, right? However, if they didn't sell in time, their wife is making them a tuna fish sandwich. Wow. I need a laugh track or something. I don't know. All right? What? What's that? Because that was the only picture I could find. I got that one quick. What's up, man? All right. Okay. So let's talk about what affects the market. And again, this is a review. So we had a long presentation on this, but we're reviewing this again. So some things that can affect the market is earning report, news articles, and rumors. Let's talk about news articles. A bad news article could cause the market, could cause a stock or the stock market to drop, right? The problem is, news articles are, I say sometimes, I'm going to tell you always, manipulative. So the word fake news, you guys have heard this before? Anybody ever hear the term fake news? Fake news, I believe, was invented in the stock market. And as you remember, how it works is really simple. If there's a money manager that wants to drive a stock down, he simply calls his friend to write an article, and he writes an article about how bad the stock is right now. Matter of fact, if you remember last year, Facebook, Cambridge Analytica, so the Cambridge Analytica story, it's funny because when you actually read the article that came out last year, Facebook dropped overnight, it dropped 10 points. To me, that was a buying opportunity. I was so excited about that. Because the article simply said, what happened, we all know there was the data was taken, whatever, who cares. But the article said that it happened 3 years ago, and things have already been in place to prevent it from happening ever again. So here's my thought on the Cambridge Analytica article, and what happened was somebody released this article from a story from 3 years ago just to drive the stock down so they could buy it the next day and make some money. Well, obviously we all know that story got legs, and unfortunately it destroyed the Facebook stock for 3 months. Cost me a lot of money, by the way. But just so you know, that's what happened, and that's what I believe happened. But typically, a quick fake news story or a news story that has some, interesting information in it could be an incredible buying opportunity. Eric, did you buy Facebook 3 weeks ago when I put out the text message and I said don't be faked out by the fake news? All right. So there was Facebook was at 190 about 3 weeks ago. It was at 190. And so for the students, so for you guys who don't know, what I do is I send out text messages to all the students. I tell them that either buys that I'm making or sells that I'm making, buy or sells that I'm making, or buying and selling opportunities that I see in the market. So one of the advantages of being a student is that you get text messages about trades that are about to happen or trades that I think are going to make you some money. So about 3 weeks ago, a news article came out. I swear it was hysterical. It was just a repetitive news article saying that some other states were going to sue Facebook for I don't know, for a breach of whatever. I don't even know what it was. I can't remember what it was. But it was so silly, and I read the article, and it was just a reiteration of an article from last year. Sure enough, the stock drops 8 points, goes down to 192. I'm like, buy it all? And sure enough, within 3 days, it was back to 190, and a lot of people made a lot of money. I think I made on that trade, $11,000, just because that somebody had put out that manipulative article. I caught it, and I said, oh, this is great. All right. So earnings reports. Earnings reports are quarterly, and they're announced the month after the ending quarter. So if the quarter runs January, February, if the quarter runs January, February, March, at the end of March or April will be the earnings report. So April will be the earnings report. The quarter runs January, February, March. April will be the earnings report. So earnings reports. So my students, what happens to a stock if the earnings are incredible? Jamie, what happens to a stock if the earnings are incredible? You don't know. Okay? The weird part is you think that the earnings will go up. Maybe. You also think the earnings might go down. Maybe. Make the stock go down. Maybe. And maybe it just stands still and doesn't do anything. Don't ever be fooled by the fact that earnings are going to be great. Facebook just now, right, by the way, let's use that as another example, same example. Facebook just had incredible earnings, and the stock dropped 3 points. Nothing happened. So why is that? So Tesla, I remember a couple of years ago, Tesla had the worst earnings they ever had, and the stock went up 30 points. So don't get fooled by earnings. Earnings actually can make you lose a lot of money if you gamble over earnings. Don't gamble over earnings. And when we have a set of rules that we trade by, it's 17 rules that I wrote about, about 10 years ago at this point, maybe longer, that I wrote 10 years ago that we teach, and one of them is to not gamble over earnings, because it won't work. You will probably lose money. Have a seat, man. You'll find a seat. There's one right there. Okay, no problem. Okay. All right. So betting on earnings is gambling. Stay away from it. Don't do it. All right. Finally, rumors. Buying the rumors, selling the news. You've probably heard this before, and if you haven't, it doesn't matter, because I'm going to tell you, ignore rumors anyway, because by the time you heard it, it's too late. So it doesn't mean anything. If you hear that Apple's going to buy Facebook, it's too late. Okay, Apple's not buying Facebook. I'm just kidding. But if you hear that, it's too late. By now, the price is already factored in. Don't waste your time betting on that. So forget about that. So all of these things, when you go back to it, right, all three of these things are useless pieces of information. Don't get stuck on this. This is what most people think how the stock market works. It doesn't. I'm telling you now. It's all about steak and tuna fish. When you understand that it's all about steak and tuna fish, everything makes sense. The whole stock market makes more sense. All right. So for some of you who have been in class, hey man, see Fred. So for some of you who were in class, you were supposed to go to CNBC and pick 6 stocks and watch them for a while. Just get to know them, understand them a little bit. All right, who did it? I know Jamie did it. You did it. Cool. So what are stocks that you picked?
J&J, Apple, Facebook, McDonald's, Coke, and Snap.
So this is really funny. You picked McDonald's before we talked about it this week. So this is really interesting. Jamie picked McDonald's and she was watching it. And then on Monday, was it? I guess on Tuesday. So on Tuesday, I get a bunch of phone calls from my students and they're all going, what's going on with McDonald's? Now, one of the other things we teach is pick 6 stocks and just stick with 6 stocks. Don't vary from there. And the reason you don't vary from there is because if you find out that you're in McDonald's, for example, and then all of a sudden you see Ford is making a move, you sell your McDonald's, you buy the Ford already made the move, then you added McDonald's and it made its move, and then you're like, oh wait, then you got to chase McDonald's, then you're over here and Ford made its move. So all you're doing is storing money away going back and forth. So that's why we tell you to pick 6 stocks and watch. Every once in a while, you break a rule and you see a 7th stock that's such an incredible buy that you do it. And that's basically what happened on Tuesday was I got calls from like 3 students and then Phil calls me and same thing. And he goes, what's going on with McDonald's? So check this out. McDonald's drops like 10 points because the CEO slept with his secretary. That's a really good reason for the stock to drop. I don't think they contaminated any meat in the hamburgers. Well, they might have, but we're not going to know about that for a while. So why would the stock drop? The stock dropped because they fired the CEO and they're replacing the CEO. Anybody been to McDonald's lately? Yeah. Let me tell you something. They should have fired the CEO, okay? So that's another story. So the only thing that can happen now is nothing. It's just neutral. And then the stock will probably rise back up. In fact, when you saw it, it was up here for a long time, and then it went down here because they fired the CEO, so it's only going to come back up here again. So we actually all started buying McDonald's on Tuesday, and I think we're all up a little bit. We'll see how it plays out, and we'll see what goes on. But it just happened that Jamie had picked McDonald's before that, so it was actually one of her 6. She didn't even break the rule, and she bought some on Tuesday, right? Yeah. Okay, cool. All right. Anybody else buy any stocks that they were following? I'm sorry, not buy any, but what were you following?
Apple, Facebook, Spotify.
Cool.
That wasn't even on the list.
You didn't make money on it?
I did.
Oh, you did. How much you make on Spotify?
1,000.
Nice. Oh, nice.
It was
All right, so wait a minute. You made $1,000, but how much was in your account?
I used $13.85 and I closed out at $24.97
Wow.
in like 10 days.
Wow.
It was
Okay.
because of earnings too.
Yeah, because you played it over earnings. Yeah, but that's okay. I know why you did it, because the stock was down before earnings, and that, yeah, exactly right. You played the rule that says when it's down, you got to stay in earnings, and it works. Cool. Sure.
Medical marijuana. I invested in
Yeah. Yes. Yeah. This is real simple. Okay. If everyone's talking about it, stay away from it. Bitcoin was the greatest scam ever, and it continues to scam people. Anybody want to lose a lot of money? Buy Bitcoin. It's real simple. It's too late. You know, Bitcoin was a lottery ticket when it was 50 cents. It was just a lottery ticket. People had fun with it, and they happened to collect it, and they happened to get serious with it, and all of a sudden they saw it rising, and they saw it rising, and those are the people who made money on it. Then you got the people who were actually. If you could just move over, your head's in the camera. So Bitcoin was the same thing. Bitcoin, medical marijuana, and the other thing with the medical marijuana, you were buying stocks, right? All right. So, by the way, I stopped buying stocks 8 years ago. I will never buy stocks again. I only buy stock options because I want to make money. I don't want to have my money sit around doing nothing. So, anybody think, I don't know, 10% a year is a good return? Who would be happy with 10% a year on their return on their money? Everybody, right? I'd be freaking miserable. If I don't do at least 100% a year, I'm miserable. At least 100%. And I'm going to show you at the end what I did so far this year, and prove that 100% was nothing compared to what I did. But I'll show you in a minute. Okay. All right. So you were supposed to look at the EPS and the multiple and other data. You were supposed to follow the indicators and see how they affected the stocks you were following. Real quick, just to go over EPS and data, right? We talked about EPS, which is the earnings per share. And we also talked about PE, which is the multiple. Probably out of all the indicators, not the most important one, but a fun one to watch. And how you get, and again, for people who are here for the first time, if you don't know this, don't worry. I promise you'll catch up if you become a student. It's no big deal. But I want to just refresh real quick. All right, so we talked about this. Basically, it's how many times earnings the stock is selling for. So, for example, if you had a store and you were selling, and that store made $100,000 a year in profit, and then you went to sell the store to somebody to buy it, how much would you sell the store for? Well, you wouldn't sell it for $100,000 because you might as well keep the store, right? You want to sell it for some multiple times the price of what you made. So let's say it's 5 times. So you would sell it for $500,000. That's 5 years' earnings. That's fair. That's a fair number. So basically, in this stock, basically they're selling it for 14 times earnings, which is kind of high, but it's 14 times earnings. And when you do the math, you can actually see that the price divided by the earnings per share is equal to the PE of the multiple. So if there was a stock that at 116.52 divided by 8.52, it would be equal to 14. Again, don't worry about it. All right. So let's talk about the stock market and what it really is. Stock market is basically a market in which shares of publicly held companies are issued and traded under either exchanges or over-the-counter markets. Anybody ever go to the supermarket? You buy stuff at the one person only goes to the supermarket, really? I mean, I buy everything on Amazon now, so it is a possibility that you guys don't go to the supermarket anymore, but I'm sure you've been in one. Every day is like Christmas, man. I get packages from Amazon almost every day now. It's amazing. Amazon Prime? Yeah, the reason Amazon went down after earnings is because I have Amazon Prime, so I get all free shipping. Anyway, all right. So it's basically that. It's real simple. You go to the stock market, whatever it is. You have shelves in the stock market, or you have aisles in the stock market, and this aisle sells this kind of stocks. This aisle sells this kind of stocks. This aisle sells this kind of stocks, and that's basically what it is. All right. So we have the Nasdaq. I'm sorry. Oh, okay, wrong screen, but that's fine. We have the Nasdaq, and the Nasdaq is basically stands for the National Association of Security Dealers Automated Quotations. It's just a stock exchange. It's just a place that you can go to buy stocks that are sold in this market, in this supermarket. So this one supermarket sells just these items, just these stocks. The main index is Nasdaq Composite, which has been published since its inception. It tracks more than 3,300 stocks. However, the number that you see in the Nasdaq, it's the wrong screen. The number you see in the Nasdaq, just real quick, let me get there because somehow I got the thing mixed up. All right, it doesn't matter. Let's go back. It's fine. But in the Nasdaq, there are 100 stocks in the Nasdaq that make up that number that you see, and we'll talk about how that number gets there. All right, so the Amex is also called a stock exchange. It's no longer called the Amex. It's now called the New York Stock Exchange. The only reason I bring that up is because people still refer to it. It's weird. They still refer to it as that. So that's why I want you to know what it is. But you're really talking about the New York Stock Exchange. So there are certain stocks sold in the Nasdaq. There are certain stocks sold in the New York Stock Exchange, right? You can't buy these stocks over here. You can't buy these stocks over here. Now, your account, when you go to TD Ameritrade or any other account that you buy, doesn't tell you what market you're buying it from, nor should you care, which is interesting. However, there's a reason you want to know that. There's some other exchanges also out there called the Tokyo Stock Exchange, the London Stock Exchange, the Shanghai, and there's Korean one. There's all kinds of different ones out there. There's also over-the-counter. Over-the-counter is a little bit different. It's literally, I take a piece of paper, and I hand it to Catherine, and I say, here, you bought these stocks. You bought stock in my company. So you bought stock in InvestorSchooling, and we're selling that for $1 million a share. And if you guys want to buy it, I'll hand you a piece of paper now.
That's all it takes, though, right?
Tough crowd. It's really what it is. They call it pink slips. That's really what it is. Now, you can buy over the counter using your system, but it doesn't register immediately. It usually takes a few hours before it registers because somebody has to actually write the piece of paper. There's also called the Chicago Board of Options Exchange, which is where we buy our stock options from. So when you buy your stock options, you're buying it from the Chicago Board of Options. The interesting thing about this is, as we talked about the last time, they're only open from 9:30 to 4. So you can't trade stock options before or after the market. The other markets you can trade after hours, but this one you can't. So if something exciting happens overnight or something disappointing happens overnight and you're in a stock option, you're stuck. Or you're excited. It doesn't matter. It all depends on what happened, right? All right. So let's talk about the indicators and why they're important. So when you go to CNBC, you're going to see this across the top. You're going to see the Dow Jones, the S&P, NASDAQ, Russell 2K, and the VIX. And you should know what these are. The first one you should know, of course, is the Dow Jones Industrial Average, which is basically was created by the Wall Street Journal editor and Dow Jones Company, Charles Dow, and it was first calculated in March 1896. Who cares? But what's really important about that is what it does. It's made up of 30 popular stocks. And these stocks, they have a certain algorithm that they come up with that comes up with this number. Now, I have no idea what the algorithm is, but the algorithm basically gives you the health of the stock market that day or that month. By the way, what's your next question? Yeah, I knew it. So I put them up for you. It's 30 stocks. These are them. These are the exact ones. And these stocks right here, what they do is they have an algorithm to figure out how these stocks are performing today or that moment, and it comes up with some number that the stock market or the Dow Jones Industrial Average comes up with that number. So today, the stock market actually ended up 27 something. Actually, this was pretty it doesn't matter. But 27,000 something, right? So whatever the algorithm is of these stocks, sure.
They're all the biggest corporations.
It's sorta. It doesn't have to be. They could throw one off. They could take one off and put another one on. But right now that they feel that these are the ones that really indicate the health of the stock market. So yes and no is the answer to your question. All right? And, you know, sometimes a stock does really, really bad and they have to kick it off. The NASDAQ, National Association of Security Dealers and Automated Quotation System, refers to 100 select stocks that are traded on the NASDAQ. So out of the 3,300 stocks that they trade, 100 of them are the ones that they track and come up with a formula for and create that number. By the way, the NASDAQ is mostly considered tech stocks. The weird part is Apple is not. I'm sorry, Apple is, but no, Apple still is. I'm sorry. Yeah. All right. So they're considered tech stocks. The S&P 500 is made up of 500 large cap stocks. So your question is, what's a large cap stock? It's a stock that has a certain billion number before it's considered large cap. So in other words, it's probably like Facebook, it could be Apple. These are stocks that have certain values and they consider them, and they come up with a number, the S&P 500. That's why when you watch the news and they talk about the S&P 500 breaking records, it's an important number. It's a more important number than the Dow, although I find, from my own numbers, I find the Dow more important. But to the health of the stock market, the S&P is a more important number. Also, the Russell 2000 is small cap stocks. So something that has a company that's maybe a smaller company, that would be in here. And they track 2,000. That's where the Russell 2000 comes from, 2,000 stocks. Usually a good indicator of mutual fund performance. And the reason for this is because a lot of mutual funds invest in small caps. Makes sense, right? So because they invest in small caps, it's a good indicator of what your mutual funds are going to do. Finally, the VIX is probably the most important thing as a stock options trader you want to look at of all the indicators. The VIX is really a fear gauge or fear index. When the VIX is high, your stock options are going to move really, really fast. It doesn't mean they're going to move up or down. It just means they're going to move really, really fast. And it's calculated based on how many people are buying puts and how many people are buying calls on a certain stock, and what the spread is and what the difference between the two are. And it happens really fast. When the VIX is high, like the VIX today was about 12, which is really low for the VIX, which means that the stocks are moving slowly. So they're moving at a slow pace. So your stock options are going to move at a slower pace. When the VIX is high, you could literally have $1,000 in your stock options account at 9:30 when the stock market opens. At 10:30 it could be $200, and at 12:30 it could be $1,400. That's how crazy it is when the VIX is high. So watch for high VIX numbers and watch how crazy the stock market gets during high VIX numbers. Now, a lot of times the higher VIX number really does mean the stock market's going to come down. So watch for it, but at the same time, it doesn't mean the stocks that you were in, the 6 stocks you're in, are going to come down. They may actually go up.
What's a high VIX number?
A high VIX number is really anything over 18. So if you can imagine it's at 12, and I'm telling you the high VIX number is about anything over 18. Imagine when it hits 30 or 35. It's happened twice this year. Actually, it happened once this year. It happened twice in the last 12 months. Crazy number. It doesn't stay there long, but it does happen. So watch for it. In fact, in 2008, when all the craziness happened, the VIX was really high. It was in the 30s or 40s. So take a look at it. You'll see. You can actually go back and track it. All right. So this is what you're going to look at. You're going to look at the Dow Jones, which, by the way, that's the number 27,706 sometime today, the S&P 500, the NASDAQ, the Russell 2K, and the VIX. And the VIX today was right around 12.5, which, by the way, was the lowest I've seen it in a long time. So what happens when something hits a bottom? What do you think happens? It goes up, right? And that's pretty much what we teach here. We teach to see how the valleys and the mountains in the indicators will affect the market for you. So watch for this. Watch this tomorrow. Take a look at the VIX tomorrow and see what happens. Take a look at the Dow Jones and see what happens. See if this drops 200 points, what happened to the VIX. Important things to learn, and it's really easy. You're just looking at a screen. You go to cnbc.com, and that's the first thing that comes up. Really easy to look at. So if you move over and you push that button, gold, you'll actually go to metals, and you see what silver's doing, what gold's doing, what copper's doing, what platinum's doing, what palladium's doing. How many people are still buying silver? I know, Fred's back there going, I'm buying silver, I'm buying silver. So I did a Facebook post about 4 months ago, maybe, I don't know. And I said, buy silver, buy silver, buy silver, buy silver, buy silver, buy silver, buy silver. And at the time, silver was at 14. Now you go, okay, so it went from 14 to 17, who cares? And then some of you might be even thinking, well, I heard buying gold is a good idea. Let's talk about that for a second. So gold is at, let's say 1,500, right? So for gold to double in price, it has to go from 1,500 to 3,000, right? Makes sense? You guys all know how to do math, right? But for silver to double in price, it has to go from 17 to 34.
Or what?
Per ounce, yeah, right. Thanks for asking that, actually. Per ounce. So if it goes from 17 to 34 and it doubles, what are the odds? So think about this. What are the odds of something that's $1,500 going to 3,000 versus the odds of something that's $17 going to 34? Now, you may think that it doesn't matter, but it does. In fact, when gold was on a tear, when it went from 800 to almost 1,900 at one point, silver went from 7 to 50. So you can invest in all the gold you want. I'm buying silver. Now, I actually buy the physical silver, and when I talked about this in my Facebook video, I actually said go to eBay, go to Silvertown, and buy 10-ounce bars of silver. Or if you have to, buy either 10-ounce bars of silver or the 10-ounce or the 1-ounce coins by 10 1-ounce coins, and just put them in a drawer somewhere. Now, the cool part is PayPal. Anybody have PayPal? So PayPal has 6 months free financing. And Silvertown will send them to you free shipping. They do charge you higher, so they may charge you $18 instead of $17. But if you're getting free financing for 6 months and you're getting free shipping, that dollar is pretty, it's not bad to spend it. So now what I'll do is I'll buy 10 10-ounce bars. So it'll cost me about, in this case, it'll cost me $1,700. I'll buy it and I'll just put it in a drawer somewhere, and I'll just pay it off in PayPal in 6 months. I'll pay it off, and I'll pay it off with zero financing. Sometimes I'm buying 10. Sometimes I'm buying 20. Depends on where silver is. I'm going to tell you, if it goes back to 16, there'll be a big heavy box coming here one day. There's other things called the overseas market. So this is the Nikkei. This is a Tokyo market, Chinese market, the Hong Kong market, Asian market, and the other market, whatever it is. I forgot what it is off the top of my head. But that's fine. So these are all the other markets, and these are cool to watch too. These are happening overnight because the time change is different. So sometimes you want to watch those so you can get an indication of what's going to happen the next day. So look at these things. If you want to be a stock options trader, look at these things occasionally just so you know what's going on. Right? If you want to learn how to fly a plane, some people read a book and they think they know how to fly a plane, but then they got to get in a plane and fly it. But then if they haven't gotten in a plane and flown it for 10 years, they probably forgot how. I'm using it as an analogy because if you're in the market, if you actually just watch this now and then, just open up your phone, your cell phone, go to Google and type in CNBC, and you just take a quick look to see what's going on, you're in the market. And if you're in the market, it'll start becoming easier to make money in the market. So your assignment today is to follow the indicators and see if you can find a matching pattern with your 6 stocks. Now, this is interesting. When the Dow goes down, there are certain stocks that go with it. So if you know this, if you know the Dow's down and there's certain stocks are going with it, you just ride them together. Now, I'll tell you a really great one. Royal Caribbean usually goes down with the Dow. So if the Dow goes starting to go down, Royal Caribbean's going down with it. Just keep that in mind. You'll see it. Watch some other stocks and see which ones go up and which ones go down. Everybody knows that we're working on JNUG is one of my stocks, right? So JNUG is actually not even a stock. It's actually a fund, JNUG. And guess what it is? It's a gold fund. So this is so obvious. When the stock market goes down, what happens to JNUG? It goes up. And it's so clear. You just watch the two of them go like this, you know, and it's great. So JNUG was down 7 points today because the stock market hit a record. In fact, I missed it. My alert was set for 65, and I'm sorry, 55, and JNUG hit 56, and I wasn't aware of it because my alert was set for 55. But that would have been an awesome opportunity. Because at 56, that's going, I'm telling you right now, it's going from 56 to 62 in a week.